Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business and brought to you by MegaPixx Media. Joining me today is Marshall Toner, Managing Director and National Lead for Industrial with JLL Canada. Thanks for joining us today, Marshall.
You're welcome, Mario. Always good to join you.
All right, super. Well, you folks have the Q2 numbers out for the industrial real estate market in Calgary. Let's go through a couple of the key areas here. Let's talk first of all about vacancy. It's at 4.6%. It's down 70 basis points from the last quarter and down 240 basis points from over the past 3 quarters. What's happening and why in the vacancy area?
Well, it's just an ongoing trend of industrial real estate, not only in Calgary, but nationally and in North America, actually, where the industrial market continues, the vacancies go down. A lot of this has to do with e-commerce, which we chatted about on our last call, Mario, and logistics, 3PL, it really driving it across the nation. Here in Calgary, the biggest drop was last quarter, and a lot of that had to do with the movie industry that absorbed 500,000-600,000 square feet. This quarter, it's more distribution and more e-commerce.
Okay, and we look at the absorption numbers, 3.3 million square feet of absorption so far this year, well above the 5-year average. I guess that's just the indication, right, of how strong the market is.
Yeah, and it's also a reflection of what's going on in the development community, where there's 3 or 4 developers building big box distribution buildings on spec, and they're filling them as they build them. So it's really a good note for Calgary. We've kind of taken it on the chin with respect to the oil and gas market and the economy of not only Calgary but provincially, and this certainly helps things, and it speaks well for what's happening in the industrial market and how strong it is. And again, I'll mention not only just in Calgary but across the nation.
Yeah, exactly. All right, then. You did mention some development. I see by the report that there's 2.7 million square feet under construction. How does that number under construction rate to the past? Is this a strong number?
Yeah, for sure, it's a strong number. I mean, the last couple of years, we've been in the dip of the trough, so to speak. And I think when we see a lot of construction, the signal is that developers feel confident about what's happening in our economy, that they're willing to take the risk, spend the money, prepare the land, and then build the building on spec. I mean, there's quite a bit of front end cost that goes into that, but they feel confident enough that it's going to be filled in a reasonable period of time, and they've been right. It's basically right now, as fast as you can build it, you're filling it for the most part.
And Marshall, when you look at the rental rates out there in the market, what's happening with them, and what can we expect going forward?
Well, as vacancy drops, it gets to be more of a landlord market, obviously. And so when it becomes more of a landlord market, rental rates firm up. And so we're seeing, the concessions that landlords have to give. It's holding static or reducing slightly, but you're seeing that they're holding on the rental rates more than they were, say, a year ago at this time.
Okay, super. When you look at the market going forward, what is it going to be like for the next 2 quarters?
More of the same, as far as I can see. I don't really see anything that's going to disrupt the trajectory we're on at the moment. There's quite a bit of product under construction right now. The market is still very active with tenants floating around looking for square footage, and not just large box stuff, in that mid bay, small bay stuff. It's active in all segments of the market.
Okay, and Marshall, last question I have for you. When you look in the past quarter, the second quarter of this year, what were some of the biggest and most significant deals that were in the market?
Well, I'm just going to look at Calgary and surrounding area, just at a high level, some of the larger deals that were done. the largest e-commerce group in the world, was able to lease another 220,000 square feet in the Balzac area. A company called Robert Group out of Quebec, which is a third-party logistics provider. They've leased 139,000 square feet in the Balzac area. Bolt Supply House was able to lease just over 100,000 square feet in the Balzac area as well. In Northeast Calgary, Spartan Controls, 138,000 square feet, and Walmart was able to lease 150,000 square feet. And then in Southeast Calgary, a company called Easy Trim leased 100,000 square feet. And I'm going to throw in a sale as well, Mario, because I think it's quite important. We had a facility that was 128,000 square feet on 21 acres, the former Armtech site, and it was bought by a BC investor. And then a large sale from the investment perspective in Southeast Calgary. Hopewell Montez had a 500,000 square foot building that they've sold for plus or minus, I think, 67 million, which is, according to my math, a sub 5% cap, which is, again, in 2020, Calgary was kind of a no-fly zone for investment dollars from Eastern Canada, and that's certainly changed. Cap rates are going down and interest is going up. So it bodes well for developers and landlords that are trying to sell product.
Okay, super. Well, thanks again, Marshall, for joining us today.
Always a pleasure, Mario. See you in another quarter.
You bet. That was Marshall Toner, Managing Director and National Lead Industrial for JLL Canada. This has been Business Insider with Mario Toneguzzi on YYC Business, and brought to you today by MegaPixx Media.